Hi, the topic of this video is equity. What is an equity? Equity is ownership interest in business. When an owner or partners or company start business, they put capital to run the operation, and it's called owners, partners, or shareholders' equity. It is the residual interest in the total assets of the entity after deducting all the liabilities. As in case of wind-up, first liabilities will be paid and owners will get their interest from remaining. It is the claim of owners in the total assets. In sole proprietorship and partnership, it will be called capital, and in a company where a number of shareholders there, it's called equity. When there is an increase in equity or capital, it will be credited, and if there is a decrease in capital or equity, it will be debited. Let's see the examples with their original place in account regarding equity. Owners or partners' capital original place in accounts is credit. Same way shareholders' equity original place in accounts is credit. Preferred stock original place is credit. Retained earnings, the position in account or the original place in accounts is credit. Thank you.